Why do you think the market and investors and stocks have been simply able to shrug off everything in the world that seems like it would be a negative on equities?
Well, I think there are a couple of reasons we can point to, Brian. I think first, when we're looking through, we still have a positive earnings story. It's not maybe as robust, but we got through the first quarter. The fears were we were going to see year-end negative earnings growth. Looking forward, we continue to see some acceleration in that earnings gains. And arguably, with interest rates having falling, the hurdle rate under which you want to start thinking about stepping out into the equity market from holding fixed income remains a compelling trade on a relative basis. So, equities are able to look to the prospect of earnings and lower hurdle rates.
When do these things, if at all, Jack, begin to hurt earnings?
Well, I do think that you start looking to some risks that come out of the trade conflict. The risk that most people have looked to has been this idea of what happens to margins. But last night we did hear the thought that that uncertainty is turning itself into some fears with sales. You're certainly hearing some data coming out of some of the transportation sector that you're seeing somewhat slower rail volumes, some trucking volumes falling as companies are working their way through their inventories. So I think ultimately, there is some uncertainty out there. We have to be cognizant of that. But at the same time, I think it still comes back to companies are doing a good job of trying to manage their costs, trying to control what they can control. And that gives us this uncertainty, which ultimately winds up creating opportunities in the market.
And you think there's opportunities in the railroads?
Yeah. I mean, I think ultimately you come back to the railroads, and I think they can be a beneficiary of an ultimate trade deal. When we think about what the United States winds up selling, or at least what we would like to be selling more of to Japan, these are going to, China, these are going to be bulk commodities. When you talk about the president's move to try to work through some issues with Mexico, again, the idea of selling more agricultural products, these are products that tend to move by rail. So it might not be an idea that works today or this month, but I think over the next 2 to 3 years, the rails are certainly well positioned. And you have to like the pricing power that comes from a relatively concentrated and disciplined sector.
Well, when we got that Mexico tariff tweet, you saw what happened to the rails, particularly Kansas City Southern, which has more revenue from Mexico trade than any other. They, of course, have come back a bit. Is this really a trade-related headline trade, though, on the rails, Jack?
I think it's the immediate proximate catalyst is going to be around trade. But you look through this business, and it's been much more capital efficient. It's certainly making steps to actually improve their efficiency ratios by embracing precision rails, precision scheduling. And I think that makes for that longer term story. But certainly in the shorter term, a positive trade deal would be a nice kicker.